All right, good evening, guys. Ken at Tortoise Capital. This is the nightly strategy podcast for October 29th, 2021. So it's Friday night, so we'll be doing the weekend reports. The first thing I want to just announce to everybody within the sound of my voice is an opportunity to participate in a Protreptic Coaching course with my good friend and mentor and teacher, Jens Larsen from Denmark. He's written 8 books on this topic. And Protreptic coaching is the style of coaching that was used by Socrates and Aristotle in ancient Greece to develop insights in the philosopher kings that they were teaching and the strategic leaders and whatnot. So it's like using the Socratic form of questioning and reasoning, but in a coaching arrangement. And protreptic is the Greek word that describes that. So Jens Larsen's been doing that for 25 years. And he also co-wrote the True Storytelling book that my mentor, David Boji, wrote. And I've been going through all of their courseware for the last 2 years. And I've been working with Dr. Boji since 2007. And the True Storytelling work is absolutely transformational. It's changing the way I've been teaching in here and in the military college, and then also in my doctoral programs. On the Patreon site, if you click that link, you'll be able to see an hour-long session where Jens and I describe the protreptic coaching in a little more detail. And I go through a coaching session with him. And that was an amazing workshop session for me with him. It really helped me get clarity on a lot of innovative types of programs I was trying to get done at the college, and I was having some frustration with it. And that coaching session just absolutely helped me get clear and organized and motivated and successful. I have finally persuaded him to do a home study course in Protreptic, and that I am going to do all the infrastructure work that it takes to turn that into a deliverable course. And as part of that, I'm going to be an excellent student in his home study course so that we can construct a complete cycle for delivery. And I told him he should be selling the home study course for at least $1,000. And so what I told him was, and I've paid him $1,000 already on retainer to be his student in the preparation and the recording of this first iteration of the home study course. What he's been doing up until this point is running workshops for $4,000 to $5,000, but which take his personal involvement in all of the delivery. And what I want him to do is get out of that business and to do more coaching itself. And so I've asked him to record a session with me, a series of workshop sessions with me, so that we can make that accessible to the world for $1,000. So he's agreed to do that just to see what that's like. And so the content of the course that he's going to be teaching is him using Protreptic coaching on me so that I can become a better teacher and a trader. If you're interested in that, and if you'd like to be in my study group, to have skin in the game, I'm going to open this opportunity for you to join my study group for 5 people, to join my study group for $200. You'll get to hear all of his lectures and lessons to me. You'll hear my responses. You'll get a chance to do the readings and do the homework yourself. You'll get a chance to listen to him coaching me as we record that. And you'll essentially be able to receive that course for $200. And because I'm going to be working on it as a teacher and a trader, this is an opportunity for you to see Protreptic coaching as it is applied to the practice of trading, which I think is going to be really powerful. It's the way that I am already conducting coaching, but you're going to be able to see in more detail some of the foundational ideas. And what I've asked him to do is to help me learn two things: how to be a protreptic coach towards my own work so that I can be self-actualized, and then also so how I can be a better protreptic coach with others. And so that's, I think, going to be very relevant course material for us. Now, if you'd like to be an active participant in my study group, I'll open that opportunity, like I said, to the first 5 at $200. If you would like to be an auditor of that course, to watch us making it, but you don't necessarily want to be active, in the course and all that jazz, and you just want to study it later for your own purposes. So to be an auditor or a passive observer, which is fine. So there'd be no obligation or requirement to participate. I'm going to open that opportunity to folks for $300. So that if you want to be an active participant, there'll be a little bit of work I would expect that you would do, some questions and insights and whatnot. And so I'm going to give you some work study credit for that by only charging $200. But if you'd like to audit the course, I'm going to open it up during this one for $300. After this course is completed and I get done editing it, I'm going to construct it as a self-paced home study course for Jens, and I'm going to be hosting it on my website on the where I've been putting the new courses I'm rolling out, and it's going to be $1,000 then, and that's the cheapest that it's ever going to be, and that's going to include a couple live protreptic coaching sessions for also taking the course. So if you're interested in that first 5, let me know. We'll handle payment for the course through PayPal in the usual way. And so this is the training notes that I sent to Jens about constructing. Since I am an expert in curriculum development, I'm helping him construct a course that is professional. So I'm helping him do a course map of specific exercises. I think it's going to be probably 1 to 2 hours a week is what I expect the pace to be. It's probably, 30 minutes of reading, an hour of presentation, and maybe a half an hour of coaching and whatnot. So it looks like a couple hours a week, and it'll probably be 7 or 8 lessons, a couple hours a week. So the plan is that he's going to identify the readings for us to do and prepare his, 15-minute lectures. And then I'm going to do all the readings, and I'm going to provide my note sheets from the reading of the Protreptic book, just like a really good student would do. And then I'm going to do the practical exercises that he directs. And my focus on that is going to be to improve my teaching and trading practice is the object of study. And then we will record each week's lesson. When I present my homework for that lesson, then we will do a protreptic session right then and there. And then that'll be part of that whole week's lesson. Then it'll give me the lesson for the next week and so forth. And then after that, I will do a reflection journal entry and make that part of the lesson as well. So there will be a pretty robust package. And I expect the time commitment is probably for an active participant. It's probably, if you did all the readings and paid attention, it's probably 2 hours a week. Very manageable. And then once I get it into the home study course format, that'll be self-paced. So that's the plan for protreptic coaching. I also want to just say while I'm here on that same page, there was a discussion yesterday with Luke, who was looking for some help on getting into the zero state and whatnot. And this is a video from the meditation album that Bill Scheidt and I did, where I was talking about the walking man and the 5 ways of knowing. And he put that into a very nice, professionally produced song or narration with pacing, but also in background supporting rhythms with the drums. And so I think it would be helpful to listen to that to get into the zero state and to understand what we mean by the walking man and 5 ways of knowing. And that will help you with this, I think, the psychological aspects of trading the way we trade. So that link is there at the Patreon page. Okay, so I just wanted to share that with you. All right, let's get to the, let's find my stuff here. All right, let's get on to today's work. We'll start with the debrief. All right, so what I'm noticing for today is that that yesterday's little gains were maintained today. It started with a gap down, but then it closed strongly and pushed to make a new high, a new 10-day high, 30-day high, and all-time high at 460. So that's really very good. The Hull 3-period moving average is continuing to point up. The RL30 extension is pointing up. The PSAR is marching up nicely. So this is everything that you want to see that's good in the world. As we take a look at the framework, I would say let's look at some key prices. The edge of the dragon and the 1-day low is solid here at like 456. The southern skin of the dragon is at like 452. The Z1 line is at the edge of the rivers at 451.66. The Z2 line, which is just inches ahead, is up here at 460, almost 461. The RL90 is at 449. When you look at the at where the PSAR will be, excuse me, next week on Monday. So if we were to take this PSAR extension on Monday, that's going to be like right here, and that's going to be at about 449. Today's PSAR at about 448. Bollinger Band mean down here at 442, and notice that the RL30 is rolling up, and that slope is starting to improve. The 10-day low is here, which comes in at 448. That also coincides with the 2.5% sell-off. That support level, along with the 10-day low, is like right here at 448 and some change. The 30-day low is way down here and all the way back here with oh, I guess it's even lower. Yeah, here's the 30-day low. The 30-day low is way back here at 426. The last reversal in the RL10 that we had back when it was in the winter, before it became spring and summer. So this RL10 is way back here at 429. The belly of the dragon, 432. The 5% sell-off is this line. It comes in at 436. And then the Z1 line here at 433. So that's our price ladder, our price stack. For me, where I have my stop as a swing trader would be, I think it has to be here at the edge of the river at 456. I wouldn't be offended if you took it here, but I don't think you can afford to be any lower than that 1-day low. The skin of the dragon, maybe, if you wanted a wider stop at 452. And then this cluster here around 448 is the 2.5%. It's the PSAR. It's the RL90. So those would be the three levels of give back. But what I'm concerned about is that I look at this RLXD and the Z2 gains on this last swing run. You might have been a little bit earlier, but if you had the conservative entry just short of the Bollinger Band mean, if you gave back this much all the way to the 2.5%, you're giving back half of the gains. If you let it go all the way back to the 10-day low and then started to to make your sell, you're already well oversold on a percent R or the 10-day NDX. And so to me, that's given back too much. And so I like this stop here because it preserves 80% of all these gains. It preserves that much, makes that our money, and I'd like to keep that locked in. So I'm only willing to give back about that much. So this is kind of a money management and psychology stop. So that's it, 1 bar low, 2 bar low, edge of the dragon. So that treats this entire section up in here as noise, as long as it's inside this yellow box of the 1-day range, then it hasn't given us an indication about what it wants to do. But the instant it goes above today's high, it's into the green zone and we're long and strong. You could argue that you might want to you could be trading short intraday inside this blue box. But I don't think I'd be picking up a swing short until I was at least south of the 5% sell off and below the PSAR. I would take that as the first time that I would consider a swing on the short side. In the meantime, I have a long side bias until that point. Okay. Let me know in the chat if you found that to be helpful. Okay. All right, so today's S&P 0.2. We had the Russell slightly underperforming at minus 0.03. You had diamonds were slightly better today at 0.26. You had treasuries at 0.31. You had technology at 0.49. And then EEM was the real laggard today, minus 1.45. So you can see that those U.S. indices are really just leaving the globals behind. They're getting smacked pretty well. So the S&P 0.2, tech, treasuries, and the large caps were better. Only the broad small cap index was worse than the S&P. All right, let's take a look at the upside targets. Thinking about the way ahead. We'll start here with lithium and VXX were better. So when VXX is positive, that tells me to be a little cautious about the vulnerability to these high prices going into next week. But it wasn't a runaway move in the VIX, so that feels more like just guys were willing to pay some portfolio insurance for these for the recent gains, but it wasn't anything like trying to exploit a panic sell-off. So that I don't take that as too negative. Clean energy 1.3, blockchain 1.8, the Bitcoin Trust 2.06, the Bitcoin futures ETF 2%. Then you have the large cap blended crypto 3.7, Ethereum up 5.06. And now we'll take a look at some the key winning targets. U.S. Steel 13%, TX the steel company 3.8, Tesla with 3.4 to close above 1100, just on a rampage. I'd like you to just notice that Tesla has that green dot means it's in a monthly summer. This green dot here means that it's in a weekly summer. You know, that's this green dot. And then this green dot means that it is in daily summer. So monthly, weekly, and daily are all in the summer. No other symbol has that. That's pretty amazing. Now you have some things where it's monthly summer and daily summer. That's good. So like the steel companies are all good. Microsoft is like that. Microsoft this week became, you know, the most valuable company in the world at $2.7 trillion of market cap, replacing Apple in the top position. They have just been quietly crushing it. And it's not so quiet that we didn't notice it, but we've been noticing that for like 3 months. We've been talking our way through that and benefiting from the gains in Microsoft as a tech leader. It's not just the disruptors, it's also the proven money makers with a lock on their part of the market. So Tesla and Microsoft crushing it. Virgin Galactic up 1%. Yeah, that's about it. So we'll go now to look at the sectors that underperform. So the S&P was at 0.2. You had the FANGs slightly underperformed at 0.15. Now we're getting into negative territory with agriculture, consumer discretionary, commercial real estate 0.37, marijuana, finance, ARC innovation, oil, materials, blended commodities, oil exploration, energy, Mexico, lumber. So we're starting to get into real negative territory here, all the way down to you know, almost 1% of underperformance. Then we have S&P Biotech minus 1.1, the other lumber 1.3, wheat and precious metals off 1.6. ARC Genomics 2%, Brazil 2.6%. Now individual companies underperforming, there's Squarespace, John Deere, Apple and PayPal, Robinhood and Cliff, Alcoa and Devon Energy. So a lot of industrials in there. U.S. Steel had the anomaly. U.S. Steel and I would say, you know, TX, those were the anomalies today among the industrials and the metals. So that means there were people really buying those while materials were down and their peer group was down. Those two really dominated. So let's look to see if there's more of that available on Monday. Excuse me. All right, let's take a look at a couple really good trades from the guys today. I think they did a really nice job. All right, this is Jamie's, and he's working the S&P minis. Let's see my annotation gizmo here. Oh, pardon me. So a nice like PSAR flip from yesterday's close. I look at the space between the PSAR flips as sort of that noise box. You could widen that a little bit, but that's where the PSAR flip occurs as this thing gaps up above the VWAP. And notice the abnormal pinch of the Z3s. That tells you that the width of the Bollinger Bands is abnormally small or tight. So that's very quiet. And so he buys essentially almost a Z2 breakout, almost a Z3, and then uses a tight stop here. Gets a nice move up. When the RL10 rolls over, he goes ahead and takes that at the edge of the dragon, that's similar to the the exit I was offering for the market, the skin of the dragon. So that's nice for 0.5. It gives a nice quick retracement. Now, the fact that the RL10 rolls over here above the VWAP and above the previous RL10 makes this a Kata 2. Perfectly executed. He's got a nice tight stop in here. He may have gone all the way down to the edge of the RL10. I wouldn't be offended if that was your risk box also, like if you took that whole box as your risk, right? So if that was my risk box, I mean, I would be willing to accept that box right here. You could also take it right at the base of the dragon. And that would be fine. Then I would certainly be using the southern skin of the dragon. That would probably have gotten me out here. If that gets me out, then this retracement here where the RL10, that you have to get back in right there if that other one was going to get you out. But he's got that wider stop, so he's not chased out. So he gets his Kata 2, he gets a second position here. He doesn't exit here. He's, I think, probably using the PSAR as the sniper. He noted that there was a possibility of a third position, a Kata 2 there. You might have taken it as the Kata 2 right here. If you take the top of the RL10, you probably get this. That would be excuse me, that is a 3 breakout. That would be an emerging dragon. If you take it above that peak of the RL10. So either one of those was a legitimate third position. He cashes a very nice, like a 1, 2, 3 exit here before it gets out of the dragon. And on 2 positions, locks in 5R. Pretty nice. He tries this reversal happens pretty quick. So he buys this right again as it's emerging above the dragon and baby dragon. I like that one. That's like an ED or a Kata 2, but a quick scratch, well done. Now he notices as this is starting to fail, there was a possibility of a short right here as it crosses the Bollinger Band mean. And as that starts rolling over, that's a very good short, in which case your target would be a return to the VWAP, much like it almost did over here. But that's the reward that you're looking for. And so you could actually, if you take that trade, you could have your stop right here. And you're never going to take more than a 1R loss. You just go to the PSAR and then you're good. And then that becomes your risk box. He didn't take that one. He noted, but didn't take this one. This is, now notice that the spring the fall in RL10 turns to winter here. So that makes this a supported winter crossing because it has crossed the dragon and then it rolled down, and when it breaks here, that's also like a collapsing dragon. So there's a lot of good reasons to get short here. Again, your target would be here. return to the VWAP and now the RL70 long-term fair value. So that would be your reward. Your risk box would be here. You'd get paid on that. He does take this next continuation as a short, makes a quick scratch, stops and reverses, gets paid for 1.2. And so he nets out about a little over 6R today. And the extra 0.2 pays for all the commissions. So really nice work. And this is in the S&P E-minis, and this is on 5-minute charts. So very relaxed, very relaxed. Nicely done. So here's Luke with the ever-present cliff on the 2 minutes. We have a big gap up. He gets like a 1, 2, 3 entry with a wide stop. It runs up far. He takes it. He gave it as much time as he could. He didn't let it go below the VWAP. He didn't let it go negative. He banks a 0.1, but really that was Luke hoping that this, giving it a chance to really go. It never really did. It sells off. Let me clear that out. So it sells off down here and then starts to reverse. When it comes through the dragon, he kind of waits for it almost to break above the high of the day. And he goes for this, and then it promptly fails. He takes a good exit short, just on the short side of the VWAP. That's nice. I'd like to see him get in a little faster. Like that's where I think the stop and reverse should be. If he does that, then this becomes a scratch instead of a minus 0.4, where he gets short here. It gets this far. Look right here, just scratch that if it's not working. You know, it was supposed to go, if that was going to fail all the way down to this price level from yesterday, it would not have stopped here, because here's the low of the day. And this thing started to reverse above the low of the day. So just let that be a scratch. That's a pretty good effort on the short side, which scratches. I want you to get long there. He decides to wait for the summer. So I'm not offended by that. Nice scratch. Another scratch, another scratch, another scratch, another scratch, another scratch. Crushes it for 9R. Hey, none of those are counting against you. None of them. But notice that none of them got back up to test the VWAP. And there was no follow through. So if it doesn't perform right away, just get out. Those don't matter. Minus 0.1, plus 0.2, minus 0.2, 0.3. So he's already netted 0.2, which pays for all of the commissions anyway. And every one of those is professionally executed. So your energy level should be going up. This should not be depleting you. When you're trading properly, that should be a reinforcing feedback loop and improving your mental energy, not draining you. That's what that video on the Patreon link will have. And then when it finally breaks, bam, he crushes it. And he does that with properly placed multiple positions. He gets the short, he gets the collapsing dragon, another collapsing dragon, a fourth one, and has a great exit, and is willing to give that a shot. It just wasn't there. So his net for the day was over 7. So welcome back, Luke. Well done. He was suffering a little bit yesterday. We got him out of that with some shock therapy. All right. Let's Let's go ahead and look at the weekend reports. I'll try my new markup software, see if that's going to help us at all. All right, so here we are for October 30th. Bullish normal. We are in overbought conditions all the way. Now the percent stretch got to yellow bullish. This used to be red, so that's very good. ADX is strong, so those are all good things. The risk Z is giving us abnormally strong positive signals for the swing, and we are in risk on. The only concern I have is that it has started this little rollover here. And so I'm mindful that it could be leading to this. Each one of those rollovers led to some weakness. So that helps explain why I'm interested in protecting that stop to the short side, right? Okay. These are going to be the holdings for November for next month. Tech, S&P, and the real estate, energy, finance, and consumer discretionary. And these are all energies. So I might be a little cautious owning all those. Now, to be fair, DBC is 1/4 energy, and it's also 1/4 precious metals, 1/4 base metals, and 1/4 agriculture. But right now the gains are being dominated by energy, and so and base materials too. So we want to be careful maybe with that. But otherwise, all systems go. ETF2 exposures at 70%, so all good there. Monthly market check. This little recovery or sell-off now recovered nicely. That's good to go. It made a new high. And now notice the Hall 3 period is pointing up. So this feels solid. I would have my stop right about here at 450 on a monthly. That one looks like an important price level to me. We are still slightly under Z2, so there's still room for positive, favorable excursions like it was doing all the way through here, where it was living above the Z2. This little sell-off caused it to come back to the edge of Z2. So that tells me that if it just got halfway up, that this thing could easily grind up to 490 over the next two months. So there's another 8 to 10%. 8 to 10% on a technical basis is hinted. Like you're not allowed to be surprised 2 months from now if that thing is at 490. On the 9-day, you notice the sell-off lasted about 27 days and then just zoom. And it's above there. And then there's our 460. It's like right in here. We don't even get to Z2 until 475. So that thing just wants to go. All good. The weekly, this is like bar 1, bar 2, because it has a higher low. And now this makes it this bar 3. So the weekly basis entry was at 447 right here. And you've already got that in the bank. And we are clear above this. And off we go. Z2 is at 460. So off it goes. And we've already, the 3-day, again, just shows some tactical joy. I really like the 3-day for short-term swings because now you have bar 1 is the low. You have the higher low. That makes this bar 3, but it never took out the high. So that makes this thing just roll into bar 2. That makes this bar 3. And so here's the open. So when it climbs above this price level, this is your entry right there. 442, loving it. Ready to add my stop right about here. I'll give it $3 or $4. That's all. We've already seen the daily. Now into the BMR portfolios. The three that we have been holding all had pretty good weeks. Tech has come roaring back. Consumer discretionary. So now our three new holdings. But this consumer discretionary is really amazing. And remember, XLY, we talked about that one. XLY, the top three holdings account for 50% of the components. That's Home Depot for 10%, is 10% of the fund. Amazon is 20%. And Tesla, 20%. Even better today because of the gains. So it's kind of hard to think of three better yet more diverse companies in the US that ought to just continue to do well. So you can own all three by owning XLY. Interesting biz. Treasuries, there was like a placeholder put in and there was some defensive buying in there, so that they're starting to turn around and become reasonable alternatives to the equities now. KH asked me, how would I trail the S&P 500 with only end of the day prices in the 401k? Depending what portion of your portfolio that represented, I would be using probably a 5% stop on that right now. I think that's because you want to stay in that thing. I would 5% to me is now the difference between long-term noise and signal. So I would think I would use a 5%, which is about a $20 stop, roughly. Which if it's trading at 460, that would put your stop at about 440. Like you don't want to give back more than 5%, in my opinion. ETF 32. The big winners, oil and oil exploration, were flat this week, but they've really been on a tear. That's why I'm a little cautious about owning them both in the blended monthly rebalancing. I'm a little concerned about that. Like I might get rid of XLE and substitute XLY so that I could get some of that Home Depot, Amazon, and Tesla piece in there. And that's still pretty good. And you're getting something that's already better than these other holdings were on the 1 week and 1 month. And if that tear continues, then that white is going to improve and they're going to move up the stack. So I think I would probably take a look at XLY. And then I might take XLK for kind of the same reason. It outperformed all three of those, and it's still in the upper third. So I might use some discretion and go like XOP, XLY, XLK. Let your conscience be your guide. Dow 30, Microsoft. Richard, I explain all that in the hybrid trading course. That takes dozens of hours to do that thoughtfully. Merck and Microsoft are getting it done. Chevron was benefiting from that run up in energy, but it's already maybe starting to stall a little bit. But those two right there, Microsoft and Merck, are just crushing it. Semiconductors and tech. There's that strength in XLY again. And maybe starting to see some weakness here in the finance sector with regional banks and banks starting to top out a little bit. The amazing run up in the natural gas complex just got smashed. And so this illustrates a really important point that things go up until they don't. So if you have the market moving this way, and then one of those subsectors makes that amazing run, and then you're waiting to see some amount of confirmation, hey, that thing is really, really doing well. And then you decide to get in at the end of the run after you've seen the gains. It's not unusual to see that kind of catastrophic sell-off as people are trying to lock in those gains at any price, and you get a fail that is even faster than the amazing run-up. So that's why when we talk about like the SSC, and we have a harsh winter and it rolls up and then it crosses the dragon, we're getting that thing on the promise or the possibility of a return to the previous fair value. So we're buying the possibility P of that. The longer you wait to buy that, the more certain you are that the move is happening. But then if I wait this long to buy it, now I only have that much of the expected move to recover it. Okay. All right, in the regional report, energy and finance still very strong. Consumer discretionary with strength from Amazon and Tesla and Home Depot, getting that done. All the large caps in the US are excellent, and growth and tech side, the growth piece is excellent too. So that makes this, which is being tracked by QQQ, an excellent buy. You can also get that with XLK, by the way. Energy and commodities really dominating right now. S&P oil in United States oil, that's XOP, oil, energy. And then energy is really good because that's the green and white. And so is XLY. That gives you this segment. Was good, now great, exploit new strength. So we'd be looking at for energy, discretionary. Clean energy is actually pretty interesting too. ICLN and then PBW is also looking pretty strong. Inside the ETF liquidity report, we're really tracking this column of ATR percentage. So these are the top 30 ETFs by average daily dollar volume over the last 30 days. The green highlights are relatively high volatility compared to other ETFs, meaning that their ATR percentage is more than one standard deviation above the average of those 30. So that makes a really good short-term trader. It's very liquid, but also very volatile. So XLE is 1.8, Brazil, XOP, gold miners, silver, and S&P biotech. These are all very volatile, and because they're on this chart, very liquid. So that makes a great set of candidates. The ETF 100, these are the 100 most liquid ones, and then this gives you expanded view. There's energy and consumer discretionary is the green and the white. Again, clean energy is even better with green and yellow. Finance and regional banks maybe still got some squeeze left in them. The bottom feeders, where I like to go to look for the possibility of deep, deep, deep value. South Korea and Brazil, Hong Kong, emerging markets. I'm really keeping my eye on that one. So when those things are gone down so low that everybody hates them and then they start getting flat, and then the first hint of that spring, and if I put on a weekly chart, if I put that dragon on there, when I see those cross the dragon, that's going to give me essentially an SSC on weekly charts. And that's a prime time strategy for swing trading. And then you can actually use that. If you're using that as a swing, you can then take that swing position as the core and make an intraday trade on turbo. Or you can do a swing trade. If you're swing trading, if you swing on a weekly chart, you can do a turbo trade by doing swings on a daily chart. And then you can turbo that by doing a day trade on a 30-minute chart or a 1-minute chart. So you can get 2 layers of turbo. But that starts off with these. Richard asked me about gold and silver. Yeah, silver, because I would actually prefer silver to gold right here, because silver is more liquid, as we saw from the liquidity report. And also, it's in the red, whereas gold is slightly better in the yellow. That just means that silver has more room to make up, that as gold was selling off, silver was worse, which means that the rebound, when it happens, it has more room to go. So I watch that by using Wheaton Precious Metals as a proxy for the entire precious metals category. That's a great company whose job is to buy and sell futures contracts and act as a raw material broker. And you get some company volatility, you get tons of volume, very, very tradable. It's a frog champion. So this way I can play the entire precious metals by just playing a single symbol. In that sense, it almost acts like an ETF, but it has more volume and trades all day, whereas the gold and silver contracts are constrained, and then that constrains the volatility of gold and silver, the ETFs. Okay. All right, shifting to the daily. Go right to dashboard number 1. Again, because we made new 10-day highs, you're not going to get a channeling or an overreaction. I'm just a little concerned again about how high the risk Z has gotten. It's already up to Z2, which is it has been extraordinarily favorable. So we're going to see that those last 10 days have been really an amazing run. So I'm not looking for much more than that. I'm going to be ready for that kind of short-term sell-off. So that's why my stop is locking in those gains. Microsoft on the min pain, along with Coke, the Dow 30 and Nike. And in the ETFs, the Qs are looking really strong. Max pains, we've seen IBM and Intel and Brazil kind of being on that list. That's where the real weakness is. Those would be my short targets. In the Dow Tactical, couple dojis, plenty of auto framers where you get favorable reward to risks. Here, there's 4-to-1 or 5-to-1 in Intel. And in Visa, there's 12-to-1 in IBM. Walgreens with American Express and Boeing. So lots to choose from. I should also note that, hey, Microsoft, we said, the tech leader is strong along with Merck, but today was Intel's day. So maybe that turnaround is already happening. See, it was one of the outperformers, and it's been underperforming. All these reds, that means over the 10-day, 1 month, 3 months, 6 months, 12 months, it has dramatically underperformed the rest of the Dow. But today was different. It was a big percent winner. All right, in the ETFs, again, handful of dojis. Still plenty of auto framers to work with in here. Emerging markets on my short list, Brazil as a possible short-term turnaround, but otherwise clean energy and tech, and then XLK tech leading the way. No surprises there. I like IBM and Intel in the auto framer because of that amazing reward to risk ratio. I also like Brazil because it's such a great trading vehicle, and it's at 2.9 to 1 as well. Like that. On the daily squeezes, I like that DIA has been tightly compressed. It was stronger than the S&P today, and it was tightly compressed. Anytime you get a really tight little doji range day, you know, and there's range compression compared to previous days, that acts like a coiled spring, and then that has a greater probability of a breakout large in either direction. So if I can use the range as my risk box, and I can get a nice big up move or down move, that puts them in a perfect critical state ready to go. Dominated by the summer, no surprises there, not much else to see. Again, a tale of the haves and the have-nots. All of these in the green down here, really getting it done. US Steel, Microsoft, Nike, Merck, Coke, five-headed monster of joy. And then weakness up in here, IBM, Disney, Intel. And notice this is the anomaly. Intel with a really strong day today. Is that a signal that, you know, it's going to start getting better long-term? If so, you would see these numbers and colors slowly getting better until someday they were down here, like all the greens, like in Microsoft. It starts with this, but we just don't know how far that improvement's going to go. But this is where you get that early alert by looking at the 2-day index as well as these other longer term indexes. And then meanwhile, over in the ETFs, the S&P, tech, blockchain, healthcare, crushing it. Real weakness here in the globals, emerging markets, Mexico, Brazil, Latin America, that's where the weakness is. All US all the time. Strong upward move. It stared that little sell-off in the face and gave us 2 days of gains. That's good. The strength of the S&P slope is positive, but it's already through this yellow zone. That's the normal range. It was horribly down. Now it's becoming abnormally up and starting to roll over and stall. That's why I'm a little concerned. You know, the last 3 days have not been huge breakouts. It hasn't failed, but it hasn't continued. It's just, it feels like a consolidation. So that's why I want to make sure that I'm locking in the gains. And we've seen the slope of the RL10 roll over. That's this one. And the RL30 is still strong. The RL90's slope Z-score, it's going to start, if we get continued strength, it's going to look like that. But notice we had a really strong move through the river, uninterrupted, and now it's starting to wobble a little bit, just like it did here. So I'm concerned about that kind of a move, and that's why I want that really tight stop of maybe $3 or $4. All right, that's everything I got for tonight. And tomorrow at 6 p.m. Central, we've got the Foundations course Q&A session at 6. At 8:30 is the swing trade session for reviewing frames, and then Sunday, usual time, at 8:30 for the review of the day trade frames. Okay, so that's everything I got for today. Take good care, and we shall see you tomorrow. For the coaching group at 8:30 in the morning, and usual link for us to go over individual development plans and so forth. Okay. So take good care, and we shall see you tomorrow.